Okay, great. Today is the 8th of March. 8th of March. I'm looking at the gold pair and I want to share some thoughts about this because very interesting pair to look at. Okay, so this is the monthly chart that we're looking at. Monthly chart. We have price currently pushing to the upside. Hold on, I need my annotation tool. Okay, hold on. Where are you? So currently we have price moving to the upside. Um, price actually got from the origin was from this zone over here. So this one basically has the power to get up there. Here it got stuck. So when it came back up again, this was the very important point. But now that it has cleared this, you're gonna be very careful that price can get up to this zone, which is almost about 2,000 plus. Okay. Now, does that mean that price will just go and fly? Possible. But what we have to see is when price comes here, we'll think what it can do then. Okay, because this can also be like a double top. And then if you see something bearish price action, this can also fall all the way down to 1600. But that comes later on. Okay. If this double top looks like Bitcoin's double top, that means buyers will be trapped right here when there's a serious, and then there'll be a serious wick here which makes it collapse. Okay. Let me see if I can do one thing. Okay, so let me just pull it this way. Let me just put it this way. I just want to illustrate a point. So this is Bitcoin. This is Bitcoin on a monthly as well. Okay, so this is what I mean. So if gold happens to come down, go up, and suddenly it does something like that. You see, it does not close above this and suddenly starts to close below here. And then on the weekly, you find that price is going down. That means, this can be turning to the downside. It's a trend reversal right at the top here. Okay, so let's now go back to gold. So gold is going up now. So you got to stay with this upside, but don't forget this. Yeah, once you get stuck here and on a weekly, daily, 4 hours, it starts to look down. Price can be turning. So, but right now, even though that's in the back of our mind, very important, stay with the current trend. So let's go look at what the gold was actually doing. So let's go look at the weekly. Price did some here, as you can see here. Did an expanding flat right there. This was another one actually, strong. It did this too, like so. So this is actually a first, second, and this is actually a third wave that's going up. And this is a first, second, and then this is a third wave that's going up. So when you see waves, this being a third wave, right, especially from here, this being a third wave, it's very important to stay with a third wave, right? And how do we know that this is a third wave? Well, we're all familiar with Elliott wave, right? 1, 2, 3, 4, 5, where this is 1, this is 2, this is 3, this is 4, this is 5. When this wave has started, try not to go against this third wave. That means this is going to upside. Do not sell this, right? Because every technique that we're going to use to sell to counter trend this is going to be very risky and very difficult. Often, we'll probably lose money. If you're scalping or doing a 1 hour intraday trade to the downside, there's a high chance to lose money. So try not to do that. Right, so now we established that price is now in a third wave, and from here, this is what we need to focus on, right? So let's go look at it. Yeah, on the 4 hour, we can see this is the first, this is second, now this is the third wave. And since the third wave has started, it's very important to put on some moving averages, right? Put on these moving averages because since we know that this is third wave, these strong moves, so let me just remove them first. You see, the problem is I think traders will be looking for moves like this. I want to highlight this because I know what some correction impulse traders are thinking. They are thinking strong move. Is this? They have the feeling of they have the feeling of selling, right? This one. They have the feeling of selling. And they will miss the trade because let's say they did not take the sell. But they did not take the buy either. They did not take the buy. There was no, they did not take this buy, they did not take this buy because you're always looking in the wrong direction. And at some point, as a human trader, you're gonna be missing out on so much trades that finally you just think, I think this is a top, I'll just sell. You see, so that's why it's important to understand that this is a third wave. Forget about impulse correction impulse. The impulse correction idea impulse was actually this way. So all this to the downside, okay, this is the impulse correction impulse that you need to focus on. All this impulse correction impulse, you can forget about all of them, right? It pales in comparison to this at the moment. And not forgetting, if you are trade this move, the origin of where price is actually came from here. This is a monthly low over here, right? It came from there. So this is all the consolidation that's been done. This is consolidation here. This was gearing up to get there, all right? So this was a 1, 2, again, 3. This is a 1, 2, 3. So when you have third waves and third waves align with each other, very powerful. Do not sell it. Do not sell this, yeah? Okay, so now I want to talk about some of the defining moments for this pair. The defining moments for this pair is actually over here. You see this level over here? Let me go to daily for you. This daily here was a defining moment. It was actually very tricky. I was watching this right here, and you can see it shot right up and then it collapsed back down, and it even closed below. So it gives you the sensation maybe it's not going to continue up because it closed below this very important level, right? But then I was not too sure. That is why understanding the Forex time, the time factor for a downside move, I'm sure those who have taken the Forex time factor course will understand. Like this, right? You should know what you're looking for. Boom, boom. Oh, third of the third, right? So you have this. So this is a turn. You actually needed something like this. Stuff must happen over here. So you look at this side, see? Stuff happened over here. This one came down. This one will come down if there's enough stuff that's going on. But just 1 week down here, not sufficient. You waited for confirmation. Wow, the next day, boom, all the way up. You see that? And what's worse, this one closed above these levels over here. See, it closed above. Very dangerous. When it pulled back here, people are looking to buy it already. All right. So now that we have established why this is not a sell but a buy, at this point in time, it's hard to say until that happened. Ooh, and this is a third wave going up, you see, and then that happened. So that becomes very, very dangerous. Okay, so now that's done. Let's go down to 12. Let's go down to 4. Let's go down to 3. And now you have this. So you know the move starts from here, and you have a first wave, second wave, and now you're thinking this could be a third wave. All right, this could be a third wave. Okay, now that I know that this is a possible third wave, now I'm looking at this also. Something extra. These are harmonic studies. Boom, 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 bong, bum. This kind of look, right, is going to break to the upside, break past that. right? For those who are familiar with harmonics, it's going to be something like that. You see that? From here, it's X to A to B, B to C, then D will be somewhere up there. 50% retracement right here. Okay, this is about 707. So price goes, when you see short, when you see this kind of ratios, never sell at the 886. It's going to break, right? When you saw that happening, this shit is going to break, man. It's going to keep flying and flying. So what this can actually do right now, can actually go all the way if it to the 1618 right here. And ultimately a big target, 2061 is up there, which is the previous high right here. All right. So what can we do now to try to get it on this trade? So there are a lot of disciplines here. There is this previous zone, which is key zones like support resistance, you can call that. There is there is wave labeling, meaning like an A, B, C. There is harmonics right here. And then over here you have impulse, correction, impulse. Right. So a few disciplines. What's that? This 1, 2, 3 wave labels is 1, key zones 2, harmonics 3. And then now we're going to come to there's also Forex time factor. This pullbacks here, waiting for the correct pullback, right? There's also this over here. I mean, how did I know that this was the correct amount of time for the upside? Boom, like so. I mean, there are like 5, 6 disciplines right here. 1, correction. You know, you buy outside. Yeah, those who understand, you buy outside the box only. All right, so that makes so this which is a time factor gives you the third wave. All right. So right now we are here. So at this level, what can we actually do to take these buys, right? To take these buys. Well, we go down to the 1 hour. So now we are really drilling in all the way from big picture all the way to the small picture, to the small time frame. And because this is a third wave, right? You see A, B, C, this is a third wave that originated all the way from the bottom right here. And we must stay with the third wave, right? So what do? We start to put on our trend, our trend lines, like so, here. 4 hour, no, on the 4 hour, you're going to see a pattern of a motive wave, which is like this, okay? You notice when it pulls back, it goes, 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 it pulls back, it goes. So what do we do now? Yeah, you just wait for a pullback and see whether it goes again, right? What's very important is not to just come to the chart and look. Oh, look, yeah, moving average strategy works. No, the moving average strategy does not work until we understand what's going on a very huge time frame, on which of the daily, weekly time frame. Because this move here has to be supported by a breakout of this. And then we just use the moving average to try to hit targets way up there, right? To give us as good an entry as possible. But so a good entry needs to be supported by a good bias, right? Otherwise, if we just look at moving average, it does not work. As you can see, it's very confusing. So right now that we understand the big picture of what exactly is going on, from these key levels to the chart patterns, to Elliott wave being a third wave, right? And then now we are able to drill in and then look for an entry, which would be, if we go to 3 hour, we got to go maybe even lower. 2 hour, we go to 1 hour, yeah. So we're not going to sell this. We're going to wait for it to come back here, and then we look for the bullish price action. We can draw a counter trend line. We're going to see what this gives us. Now it looks like that. It looks like that, but after a while, it may look like that. So it may look like that. So once it starts to break out here, you can buy your stop loss below. What's very important is not to buy, not to be aggressive, right? Let this might come here, but it might even go lower. So do not buy just because it has reached a trend line. It doesn't really mean anything if it reaches here. It's a good place to start looking for bullish price action. All right, those who are familiar with how moving averages work, you can use your moving average like green bigger than red, and then you start to buy. I understand that's what people do, but whatever we do, always wait for a proper pullback. You see, wait for at least your MACD, a bigger one. Make sure it comes back down, red comes back down. If it comes back here, it'll be perfect because why? You're gonna get something like hopefully like a red over here. This will be red, just like this. Then and only then you can try to buy. You can try to buy it again somewhere over here. Or might be even lower. Okay, I should not just make it because I know people be aggressive. They just enter. No, you have to wait. You really have to watch it and wait. All right. So that's how you trade gold and how you study from the top all the way to the lower time frame. And yeah, there's a big target right there, 2,000. But once it reaches here, should we just continue? Well, you can. For me, I would probably close out my positions. However, I'm not in gold. I'm actually trading the euro dollar, euro yen right now. Okay, I posted on TradingView. Why is it that why I'm looking for the buys? But that's for another time. So this is how to study gold, technically wise, from a top-down analysis and using all different disciplines. Try to figure out the direction and to get very good timing. Because as a CFD Forex trader, you have to be very good. Your timing has to be spot on. Because we all know if we enter the wrong place, the drawdown will be catastrophic. And because this is gold, the margin requirement is quite high. All right. So, is there anything else I can share about this? It's a little bit advanced, maybe, but it's not so newbie like. People who watch me trade know that this is not for newbies. Newbies are probably looking for stochastic overbought oversold, which that doesn't really work. So if you're looking at this, it means again let's draw the main takeaways is you need to know the very important zones. You need to know that you need to wait for all these pullbacks, and the reason these are pullbacks that we wait for is because we are now in a third wave. Okay, and where's the third wave? Third wave, as you can see, A, B, C. This is I put this here as an ABC wave. So this is the first wave, second wave, third wave. All right. But on an even higher time frame, this is also a 1, 2, 3. This is a 3-wave, right? And within this tree is now doing an A, B, and a slow C to the upside. All right. So 1, 2, 3, followed by a 1, 2, 3 over here. So the count is important. And why the count is important? Because then you understand that you're waiting for this kind of pullbacks before you can buy again. Hope that's clear. All right, I think that's clear. If it's not clear, go back and watch it again. All right. So let me talk about the downside. What would negate all this stuff? Okay, what would negate all this stuff if price. Okay, let me give the big alternative scenario. Okay, if price is able to come back, some reason, let's say we took the buy somewhere here, like what we just said, and then we got stopped out. We didn't enter anymore. Then suddenly price plunges below here and close below this level. It closes below, let's say around below 1868. Then it becomes very tricky. The upside might not be there anymore. Okay, so I'm not talking about the fundamentals between Ukraine and Russia. I'm saying that even before Ukraine and Russia have any talks whatsoever to resolve their differences, but if for some reason price actually comes here like that and closes below here, and then pulls back ever so slightly, then I can tell you that the talks in Russia, the talks between Ukraine President Zelensky and the Russian President Putin would probably come to an amiable agreement between them, even before they have finished their discussions. All right, because now price is going to go to the downside. So by looking at chart patterns, you can probably predict what's going to happen in the current crisis in Europe. But so if it does not come back below here and close below this level, this is the most current scenario right now. And we just have to stay the trend, right? Never fight against a third wave because it's going to destroy an account. Yeah. So I hope that shed some light. And thanks for watching. I hope it helped somebody. Okay. I'm going to end right now. Bye-bye.